This episode is brought to you by Raisin UK, the free, easy-to-use online savings marketplace. Sign up today and take advantage of competitive interest rates. What's more, for a limited time only, you can receive a £100 bonus when you register and fund your first savings account with a minimum of £10,000 using the code SAVINGS100. For more details, please visit the link in the show notes or go to raisin.co.uk/PensionCraft. Some banks are so massive, so important, that they're labelled too big to fail. But what happens when one fails anyway? In 2023, Credit Suisse's collapse shook the global financial system, forcing regulators into a frantic search for solutions.
Today, our guest, journalist Duncan Mavin, takes us behind the scenes with insights from his new book on Credit Suisse's dramatic downfall. And in the dumb question of the week, we ask, how do you stop a bank run? All right, let's get into it. Today, we're delighted to be joined by Duncan Mavin, editor at Bloomberg and author of the new book, Meltdown, Scandal, Sleaze, and the Collapse of Credit Suisse. Thanks so much for joining us, Duncan.
Thanks for having me on.
Now, obviously, we're here to talk about the downfall of one of the oldest and largest banks in the world. But maybe before we dive into the Credit Suisse saga itself, perhaps it's worth taking a little step back to understand the importance of banking to Switzerland. So how did banking become so central to the Swiss economy?
Yeah, it's a good question. So, this tiny country in the middle of Europe, and it becomes this kind of global powerhouse of banking. And actually, that is kind of the reason why it was a tiny country in the middle of Europe, becoming a bit of a backwater in the 18th and early 19th century. And, politicians there sort of figured out they needed to do something to stay up with their much bigger rivals, Germany and France and Italy and places like that. And so they started originally they got into transport and they started building railways to move things around Europe. And then that needed financing. And so the banks kind of followed that to some degree. But I think it was essentially that position in the middle of Europe meant that the banks became of outsized importance in Switzerland.
And I think one of the other solutions was to build a tunnel, the Gotthard Tunnel, through the Swiss mountains to connect Switzerland with the rest of Europe. Was that part of the story as well?
Yeah, that's part of it. So financing that tunnel was a part of the story. The other thing I think that happens, and that's worth knowing, is that Switzerland obviously is divided up into cantons, and not all of the cantons are about banking. And so it's quite easy to sort of sit in another country and think of the Swiss and banking and connect the two. But actually in Switzerland, they don't really think that way. If you're in Zurich, you definitely think banking is important. But if you're in one of the other cantons, it could be farming, it could be transport, it could be something completely different.
Chocolate.
Yeah, it could be chocolate, cuckoo clocks, all of the cliches. But it's really interesting because, it becomes really important later on in the story of Credit Suisse, I think, and how the Swiss are responding to it now.
I mean, one thing that's synonymous with Swiss banking is this idea of secrecy, isn't it? And the banking secrecy, it's almost like a legal privilege or the relationship you might have with a doctor where they can't really disclose who their clients are even. Like, how did this come about? And is it kind of one of the original sins of Swiss banking, if you like?
Yeah, I mean, it's enshrined into Swiss law, right? It's a piece of Swiss law. Banks have this sort of right to privacy. It's quite hard to pin down exactly when it started. There are some people who say it started hundreds of years ago, but it really became prominent kind of early 20th century, as Europe was descending into chaos, whether it was the First World War or the Second World War, there was a sort of a need for people to put their money somewhere where they felt it was safe from war. And the Swiss sort of enshrined this law to say, if you put it here, nobody can find out who is behind it. Your money is safe and private. Now, the question is whether that's a positive for Swiss banking in the long run or a negative. It's definitely led to the Swiss banks accumulating more assets and more money coming in. But it also, potentially attracts people who want to hide their money from legitimate inquiries from authorities. So, organized criminals and dictators and those sort of people would look to Switzerland and say, well, if I put my money there, nobody can tell where it's come from.
But as I understand it, how you described it in your book was there was almost a kind of regulatory capture, right, when the law was being drafted. Like, they kind of got the banks to draft the law.
That's right. So there was a moment where the banks were under pressure over, this was sort of an informal thing, the privacy regulation was sort of not really, it wasn't enshrined in law in the early 20th century. And there were sort of authorities overseas in particular who were sort of pursuing the Swiss banks to say, we need to get into there because you're hiding money from bad guys or tax evaders. In particular, French authorities were going after the Swiss banks for tax evasion. And the response of the Swiss authorities was to say, okay, we need to sort this out. Banks, come on, figure out a set of laws that work. And of course, the banks figured out a set of laws that worked for them rather than for anybody else. And I mean, I think this is a thing that happens time and time again throughout banking regulation, maybe regulation of other industries too. Turns out the most knowledgeable people about the industry are the bankers themselves, and the politicians don't really know an awful lot. So they turn over the rulemaking to the very people who should not be allowed to make the rules.
And I remember you relate this story of this poor guard who worked at one of these Swiss banks watching some of these documents being shredded, and he actually reported it, but he actually put himself at risk due to these secrecy laws.
Yeah, so you're jumping forward a few decades, but it's all sort of connected. One of the most fascinating aspects of the Swiss banking history when I was digging into Credit Suisse, for me, was the connection to the Nazis. And, this is another one of these cliches, right? It's sort of Swiss banking and casinos and that kind of stuff. And Swiss banks and Nazi gold is a real cliche. The reality, though, is pretty horrendous. And, they did two things, really, in broad terms. One was they laundered money for the Nazis. So other banks around Europe wouldn't touch money from Germany at that point, and the Swiss banks would. It's partly the privacy stuff and partly, Swiss neutrality, which in some ways sometimes translates into amorality. We don't take any sides, therefore we'll take anyone's money. So they do one thing, they launder the Nazi money, but the other thing they do is they take money from Jewish people around Europe who are worried about the Nazis and say, I've got a factory in Czechoslovakia and I'm worried about the Nazis coming, so I'm going to put my money in a Swiss bank account where nobody can get to it. After the war, when those same people or their offspring come to get the money, the problem is that the Swiss banks won't give it back to them in many cases, in thousands of cases, worth millions and millions, potentially billions of dollars. So people come and they say, can I get my money back? And there's a case that I read about in the book where this woman, her father had put money in a bank in London, some money in a bank in Paris, some in a precursor of Credit Suisse. She goes to London, they give her the money. She goes to Paris, they give her the money. She goes to Switzerland and they say, have you got a death certificate for your father? And he died in Auschwitz, so she doesn't. Anyway, jump forward to the 90s and some American senators decide they want to look into this. And they set about a sort of big investigation into what the Swiss banks have been up to. And actually, it's at UBS. This security guard that you mentioned goes down into the basement of the building one night just on his normal rounds, and he finds this huge pile of documents that they are disposing of that show how much money they are holding in this way. And he takes a bunch of the documents because he wants to kind of blow the whistle. And when the authorities and UBS find out, they prosecute him under the bank privacy laws. Yeah. And so you shouldn't have taken this information. He ends up with diplomatic or some kind of immunity in the US and ends up traveling to America.
I mean, there's one part in the book, I think it's related to a different scandal because Lord knows there's enough scandals here at Credit Suisse. But there's another part where you refer to something which the authorities term a shredding party. I think it might have been in Japan, actually. It's like globe-trotting the shredder.
Yeah, that's right. That was in Japan. So there was a period in the 90s where they were, relatively speaking, smaller scandals blowing up in Credit Suisse offices around the world. So there's one in London with a group called the Flaming Ferraris, who were a bunch of traders who named themselves after this drink called the Flaming Ferrari. There's one in Japan. There are sort of numerous blow-ups, none of which are kind of big enough to really kill the bank off, but they all put the bank under some pressure, expose the sort of flaws in the bank's culture, I suppose. Yeah, and the shredding party is exactly what it says, right? A bunch of executives get together and start just in the middle of the night trying to destroy the evidence of what they've been up to.
Because one of the things I took from the book is it's actually quite hard to pin down what brought down Credit Suisse. It wasn't really, a lack of capital or anything like that. It was just this accumulation, this snowball of scandals over 167 years. And I remember at the time when Credit Suisse went down or, was merged with UBS, before you'd written the book, and I went on their Wikipedia page because I didn't know a great deal about it. And there's, it segments it all. And there's a bit which says controversies. I clicked the down arrow and just this huge list just went off the screen with like you say, flaming Ferraris, tuna bonds, Nazis. I'm like, what is this?
Yeah. That was my view. I was a finance editor at the Wall Street Journal and had kind of covered Credit Suisse for a long time. And when you write a book like this, there's lots of other stuff that happens at Credit Suisse, right? There's tens of thousands of people who work there. They do lots of business. But in my view, what really kills them is the scandals, because ultimately in banking, banking's all about trust. And the accumulation of all these scandals destroys the trust that they have with their clients, with the regulators, with the Swiss government, and ultimately leads to the downfall of the bank. So the scandals are, I'm not just writing about the scandals because they're crazy and, salacious and interesting to read about, but because actually they really matter in this case. They're really important. The trick, honestly, with the book is something you just alluded to, really, which is there are so many scandals, it's almost implausible. There was at least one a year, maybe more than one a year for decades.
So if a journalist were to design a bank and wanted one that would generate as many scandals as possible and generate lots of copy, well, you couldn't do better.
That's right. To some degree, I've sort of avoided in the book talking about, when you talk to people who work there, there were lots of things like sexual harassment cases and incidents of drunkenness or drug abuse. I didn't really write about those in the book because those are not the ones that kill the bank, right? I sort of focused on the big money scandals that are the ones that really destroy its reputation. But yeah, all that stuff exists too. And so, as you say, if you were to sort of design something that had lots and lots of stories emanating from it, then you'd probably design Credit Suisse.
And I guess from my point of view, it's kind of interesting as a cultural story, because there's a kind of group psychology, isn't there, whereby a toxic culture can develop. And one of the points you make in the book, which I thought was really interesting, was this kind of dichotomy between the two mindsets of American banking and Swiss banking. And was that, do you think, one of the sources of all of the problems at Credit Suisse?
Yeah, I think it's culture and the reasons for the scandals are quite hard to pin down, right, ultimately. But I think it is interesting that they're almost unique in the sense that they're this Swiss private bank, does a lot of kind of hiding money away for rich people in Switzerland. And that's one bit of business. And it's sort of this veneer of, very fine wine and white glove service and all that kind of stuff. And that's one bit of the business. And then the other bit of the business is this hard charging Wall Street and City of London investment banking, trading. They're often at the forefront of whatever new product is out there, whatever new kind of derivative is available. Credit Suisse are right at the forefront of it. And there's a sort of tension between these two pieces of the bank constantly. So I think that causes problems for executives. For the CEO, often it causes a real tension. And how do you get these two things to work together properly? I think it means that, both of those places are not quite, they're not quite A team, in both areas. They're sort of better Swiss private banks and there are better investment banks. And so they're constantly trying to catch up with people who are a bit better than them in both areas of the bank. There's neither side of it is sort of super stable. And so I think that causes a problem for them. But ultimately, yeah, I think that mix of business is problematic. It becomes even more problematic after the financial crisis, when actually investment banking kind of goes out of fashion for the Europeans, at least in the old way it's been done in the past. And so they struggle really to have just a profitable business at that point.
It seemed to me that they had a problem just finding the right leadership. I mean, that culture clash can't have helped. I know there was one part in the book where they wanted to offer the CEO job to a guy called, I think it was Mac. And he said, I can't do that. I can't come and learn German. I don't have time for language lessons.
Yeah, they do. They constantly have a problem of their identity. Are they a Swiss bank or are they a global bank? And so they kind of swing back and forwards between Swiss leaders and international leaders. That's definitely a problem for them. They have investment bankers, then they have private bankers, and at one point they turned to an insurance industry executive.
Yeah.
They're desperately trying all sorts of different things.
And it seems like the new CEO was always trying to sort out the problems that the last CEO had, the scandal from the last 10 years.
Exactly. It's amazing how many times a new CEO comes in and says, we're going to do things differently. I'm going to clean this place up. And within months, they're dealing with some multi-billion-dollar scandal left over from the last guy. And all of a sudden, they're kind of scrambling and, actually they'll take revenue from wherever they can get it. And that leads to, another scandal.
They never actually solve it, do they? They never settle the cases. They always drag on for a really long time. Why was this? Why didn't they just sort of draw a line under things?
Well, I think towards the last 15 years or so, there's a strong argument that was a deliberate strategy, actually. That the chairman was a guy named Urs Runner, who was a lawyer, and he was quite influential, I think, on their strategy on this sort of stuff. And then their chief legal counsel, together, I think their view was very much kind of what you might get from a lawyer, a litigator. We will fight these cases and see if we can get away with it. We can push it down the line. Often, in the end, they sort of do pay a smaller fine as a result of fighting the case. But the problem is the cases drag on for years and years and years. So where other banks might have solved their problem, just paid the money and, dealt with the problem, acknowledge it and move on, Credit Suisse never says they did anything wrong, and they push it down the line, and they can kind of claim, we paid half the fine we would have paid. But they've had this, these things that hang over them for years and years.
And they still paid $15 billion worth of fines from 2010 onwards.
Oh, yeah, they paid a lot of fines. I mean, the thing I think is, they're not the only one who does a lot of this stuff wrong, right? So everybody has rogue traders. Lots of banks breach sanctions. Lots of banks get accused of money laundering, or they sell residential mortgage-backed securities in the run-up to the financial crisis. But Credit Suisse does all of them. It's not the worst necessarily in any one of these categories, but it's up there in every single one of them.
It's a Renaissance bank.
yeah, it's got something for everybody. It's so they just constantly get into trouble. And then I think the other thing that's really interesting at Credit Suisse is some of the scandals aren't financial at all. Some of the really important scandals towards the end aren't financial. They have nothing to do with banking. That sort of speaks to the problem with the culture, I think.
Certainly some of the problems were to do with risk management and a lack of it. I think it's partly, like you say, because they were so keen to get into new businesses with derivatives where things are notoriously explosive because of leverage. So do you think that part of the problem could have been solved if they'd have had some kind of decent risk management?
I think you're right to point to that. Certainly some of the scandal is really clear. That's an important aspect. I mean, the one that you referred to earlier, the Mozambique tuna bond scandal, which is, as crazy as it sounds.
I always sort of think I understand it, and then I walk away to get a drink, and I come back and I'm like, what was that tuna thing again?
Yeah. I mean, I can try and explain it. It's essentially 15 or so years ago, Mozambique discovers oil off the coast of Mozambique, and the Mozambican government decide we're going to get really rich, and everybody in the world thinks they're going to get rich, and so they say we need to build some infrastructure. We're going to build some radar and some ports, and included in that is we're going to build a tuna fleet. So it gives it a nice name, but it's kind of incidental to the story. But we need to get somebody to build it, so they turn to this Lebanese company to build it, and the Lebanese company says, well, we need somebody to finance it. And they go to Credit Suisse to provide the financing through the bond market. Where the risk management function comes in is Credit Suisse get a report done by an external agency into the Lebanese company to say, are these people that we should do business with? And the report comes back and says, no, you shouldn't.
No way.
They are the kings of kickbacks. Literally uses the phrase, the kings of kickbacks. And so the Credit Suisse risk committee just ignores this because it's great business. So they've got they have a process, they have a check and balance in place, and they completely ignore it. And what happens, they pay a kickback to one of the Credit Suisse bankers on the deal and about 200 million to officials in Mozambique. Eventually, the whole thing's exposed. It kind of crashes the Mozambican economy, costs Credit Suisse. That case is still going on, even though Credit Suisse doesn't exist anymore. People are going to jail. It's huge, and it could have been stopped if they'd listened to their own report.
I mean, there's others where risk management just seems non-existent, right? Like the Aragos thing, where it was a hedge fund that blew up, right? Took too much leverage, concentrated bets. And I think you say in the book that Credit Suisse's exposure to this hedge fund was equivalent to half its equity capital. Like they'd bet the bank, right, pretty much on this hedge fund.
It was huge. And what's really amazing about that is they were making a few $1 million for it. So they sort of bet the entire bank for a few $1 million.
It's the pennies in front of a steamroller thing, isn't it?
It's crazy. I mean, they were a little bit unlucky, I think, with Aragos, because the guy whose job was to kind of manage the risk associated with Aragos died, sadly, in a tragic skiing accident a few months before Aragos blew up. And they gave his job to the guy who had previously been the sales guy for Aragos. So sort of overnight, this guy goes from trying to get as much business as possible from Aragos to being the guy who's supposed to stop them having as much business as possible.
Yeah.
Who knows whether that's the critical reason it all goes wrong, but it certainly can't have helped, To switch that mentality overnight is pretty challenging, I think. And in the end, actually, a lot of other banks are in Aragos too, nobody lending quite the same way Credit Suisse is doing. They also all get out much faster when it's clear that things are going wrong. And the result is Credit Suisse takes an enormous hit on that.
Do you have a favorite amongst all the scandals? Is there one closest to your heart?
Yeah. I think that, the Nazi stuff is something obviously we sort of all know about, but I think it's really, really fascinating once you get into it. And recent, it's still going on. They were still kind of burying this stuff recently.
There were stories last week in the press about US authorities again saying this has not been fully resolved.
That's right. So they had a monitor in place to look into, whether there were still Nazi accounts, and he was finding stuff in South America. I think there was an account tied to, I think it was Mussolini that they found not long ago, a few years ago. So that was still going on until very, very recently. So that one I find really interesting. I mean, tragic and awful. The Mozambique tuna bond one is just so crazy, and it involves, so many. There are chances to sort of fix it. It's just a crazy story. The one that's probably closest to my heart in some ways is Greensill, because I've written a book on Greensill as well.
Yeah.
And actually, I think I've sort of come to think that it's really critical to what happens at Credit Suisse. So this is, they have a relationship with this Australian financier named Lex Greensill, who has a business that essentially provides loans to businesses, sort of to smooth their supplier payments. And they set up some funds with Greensill, and they end up putting $10 billion of their clients' money into Greensill's funds. It was pretty clear to me as a journalist reporting on it early on that a lot of the loans were never going to get paid back. They were to Lex's neighbor, to old friends of his. There were lots and lots of sort of loans that were problematic in those funds, and eventually, of course, it kind of blows up, right? And the $10 billion it's got a huge problem for them, and there's still, again, a lot of that money is still missing. So I think why that is really important is that in most of the other scandals, it's sort of shareholder money. It hits profit, it hits the bank's profits. In this case, it's their clients' money.
Yeah.
It's actual clients. And so I think ultimately that has a real effect on some of their wealthiest clients who say, you know what, I can't trust you with my money. I'm not going to give it to you anymore. The other piece of it is, one of Greensill's biggest investors was this Japanese conglomerate called SoftBank, big tech investor. And SoftBank happened to be one of Credit Suisse's biggest investment banking clients, if not the biggest investment banking client. So when Greensill blows up, they sort of lose that relationship too. So they've sort of annoyed all the clients they put into the Greensill funds, and they've upset their biggest source of investment banking fees.
And they made David Cameron look like a fool.
Yeah, well, that might not have been too hard. But, Cameron was an employee, essentially, of Greensill, and a highly paid one at that.
But apparently he was lobbying former government colleagues with text messages.
Yeah. Hundreds of text messages. I mean, he was sort of, constantly barraging them with messages to say during COVID, this company is really important. You need to make sure that it, gets some business. I think he walked away with several £1 million for his work. So, I'm not going to feel too bad that he had to send a few text messages.
Today's episode is brought to you by Raisin UK. Register today to compare zero-fee savings accounts on the online marketplace and grow your money with competitive interest rates. What's more, for a limited time only, you can receive a £100 bonus when you register and fund your first savings account with a minimum of £10,000 using the code SAVINGS100. For more details, please visit the link in the show notes or go to raisin.co.uk/PensionCraft. Now, I guess nowadays, when we think about a bank run, it's not like it was in Mary Poppins, where there's a queue of people and they get worried about not being able to take out their money. You don't have to physically be there queuing to take your money out. All you need is a text message from someone who's got a lot of followers, and you can spark one of these digital bank runs nowadays.
Yeah, I think it's really interesting. The regulators are worried about it. They don't know what to do. I mean, as you say, the traditional bank run is you see a bunch of people queuing outside the bank and you get worried about your own deposit. And so you join the queue and try and get your money out. And certainly, I've heard people talk about during the financial crisis, for instance, Northern Rock, queues of people. And probably one of the problems Northern Rock had was they didn't have that many branches. So the queues looked especially big. And so that leads to the run on the bank. In the case of Credit Suisse, it's really relevant. And we saw this, a couple of years ago with not just Credit Suisse, but a couple of other banks in the States where, as you say, sort of messages go around on WhatsApp or on Reddit or, one of these forums. And all of a sudden, everybody's pulling their money out. And you don't have to go to the branch. Actually, you can do it on your phone. You can move large sums of money in a flash. And the bank really doesn't know what to do about it. At Credit Suisse, I think it was really the scene of the first ever significant digital bank run. So a few months before they collapsed, a journalist in Australia who normally writes about things like, is Sydney a better city to live in than Melbourne? Or, what's the cost of a student house in the suburbs of Adelaide or something like that? He tweeted out something pretty innocuous, really, but it said, credible source tells me major global bank is on the brink, or words to that effect.
Yeah.
And the internet, did what the internet does and kind of decided to investigate. And pretty soon everyone decided that must have been Credit Suisse, and part of the reason for that is because it's had all these scandals we talked about. And within kind of hours, billions of dollars are coming out of the bank. And within a few days, about $100 billion had been pulled out of the bank.
One of the anecdotes from the book you mention is that some of the executives only learned about the crisis because their kids told them that their bank was trending on social media.
That's right. So they were, they were hearing this kind of they were completely dumbfounded. They didn't know what to do. I mean, they literally were sort of like rabbits in the headlights. They were once it became pretty clear that the money was coming out. The cast of senior executives who were there at that time was standing around their offices, meeting outside their offices, and literally didn't know what to do. Their normal plan for when things go wrong is they'd call journalists at the FT or Bloomberg or places like that, and they'd go and have a meeting with them, and they'd sit down and they'd explain why the bank wasn't in so much trouble after all, and show them some numbers, and people would write it, and everything would slow down. In this case, they didn't know who to turn to. How do you turn off the tap on Reddit or Twitter or or often in this case it was in Asia, so it was on social media in Asia, and they really didn't know what to do.
The thing I like about the Credit Suisse saga is there's always an element of absurdity lurking not too far in the background.
Yeah.
So there was this weird thing you describe in the book where there was a confusion about the initials SNB, which could mean Swiss National Bank, or it could mean the Saudi National Bank. Do you want to explain what happened here?
Yeah. So a few months after this Twitter kind of fiasco, the things had sort of stabilized, although the bank was in real trouble, but it sort of stabilized. And there was an interview with one of the senior guys at the Saudi National Bank, which was an investor in Credit Suisse. And the interviewer asked him, would you put more money into Credit Suisse? And he said no, which is totally legitimate. They're just a shareholder. They don't need to put more money in. And then the story got put out, and it sort of ends up on the newswires and things. And it says, SNB, we will not back Credit Suisse, which sounds like the Swiss government is saying we don't have their back.
Yeah, just washing its hands of Credit Suisse. Yeah.
And so all of a sudden, you can see the share price tanks because the market believes that even its own government doesn't trust it anymore. I think it is, as you say, there's a lot of absurd stuff happens with Credit Suisse.
I mean, they have a chairman with the surname Lehman, which doesn't help either, really, does it?
That's right. So, if you speak to some people at Credit Suisse, they'll say, when they were really close to the end, they were thinking of, should we put our chairman, Axel Lehman, on TV to say, this isn't our Lehman moment.
Yeah.
they just couldn't do it.
Lehman says no need to worry.
Exactly. So it's tragic, really, right? I mean, there are tens of thousands of people's jobs at stake, but it is absurd, and it just all seems to kind of go wrong for them at the end. And actually, to be fair to Axel Lehman, he's one of several top executives at that bank who just kind of inherit the mess within the last 18 months or so. And that revolving kind of door of executives we mentioned, it really has speeded up towards the end. So they've got a new chairman and a new CEO and a new CFO, a new chief legal counsel, a new head of the investment bank, and new head of comms. Everybody's new. And so when it all starts to go wrong, there isn't really any kind of institutional knowledge. It's very difficult for them, I think, at the end.
They all sound frozen from the way you describe it.
I think that's right. So frozen, maybe head in the sand is another way to look at it. I think the Swiss government, the Swiss finance minister, I think was particularly frustrated that she could see that the bank was in real trouble, and she's kind of calling the CEO and chairman, and they're just acting as though things are really normal. They've gone to conferences and things, and I can't get hold of the guy in charge because he's gone to some bank conference while his bank is imploding. But, who knows, in that position, would any of us act any differently? I'm not sure. I think if your job is to run the bank, you're probably desperately hoping that it's not going to collapse.
Maybe you almost have to act normal, because if you don't, it looks like the bank run's going to accelerate.
There's some truth to that for sure. It becomes self-fulfilling, right?
So there was this kind of last-ditch meeting, wasn't there, between politicians and the board of UBS, where they were talking about brass tacks, and they said, if there is no agreement tomorrow morning, you won't just have a Credit Suisse problem, you'll have a Switzerland problem. So it really was a systemic problem, wasn't it, at that point?
Yeah, that's right. There was a real worry that it would kind of broaden out into not just Switzerland, but actually sort of globally become a problem. And the Swiss government are kind of talking with Janet Yellen and with others, because really, Credit Suisse is an enormous bank, and if it unravels in a kind of unruly way, then there was a worry that it would sort of create another financial crisis. I think the reality for the Swiss finance minister, she's come under some criticism for the way she handled the end of the bank, which is, spoiler alert, she forces a merger between Credit Suisse and UBS. And so some people have criticized her for that. I think to sort of, offer a little bit of defense for her, I think she inherited, she's also new, by the way. So she was new in her role in the January before it collapsed in March. She I think looked around the room and said, who do I trust? This bank's in trouble. Who do I trust to stop it being, to stop this mess getting much bigger? And the guys at UBS were experienced, and they kind of, chairman of UBS had been through the financial crisis when he was at Morgan Stanley. And so I think she sort of, with some justification, kind of trusted them to get it right. I think that they were seeing, an impact on the Swiss franc already, because so much money was being pulled out of Credit Suisse. And so obviously for UBS and the other Swiss banks, that was a real problem.
I mean, I think a merger between these two Swiss giants had been rumoured on and off for decades, right? So was it a case that in the end, UBS won? They emerged victorious?
It's hard not to think of it that way. So they had talked about a merger for decades, and there were plans. Both banks had plans drawn up on how it would work. It never got off the ground in the past, partly because, egos of different CEOs and chairmen would not allow it to. So, who's going to be the CEO of the combined bank? That's a tricky question. Partly because the politicians didn't want it, because they were worried that two big banks was outsized for the size of Credit Suisse, for the size of Switzerland, sorry. But if you had one big bank, that's even worse. However, in a crisis, we'd rather have one big bank than no big banks. So they sort of force it together at an incredibly low price. It's about $3 billion, which might sound like a lot of money, but for a big global bank, it's essentially peanuts. So, yeah, I think UBS has won. I think they now have to, having won that, they now have to kind of carry that victory along, and merging the two is going to be a really tricky thing for the next few years. Especially, they don't want any of this culture we've talked about to kind of seep into UBS. So, they have that problem. They have the problem of being the one big bank in a relatively small country. So, yeah, they've won, but they still have to keep winning, I suppose.
And in terms of repercussions, do you think the ripple effects from this merger and I guess the failure of Credit Suisse, do you think that led to the problems with Silicon Valley Bank, Silvergate Bank, and the other US banks which went to the wall afterwards?
Yeah, so I think it might work kind of the other way around. So Credit Suisse was already in trouble. And it had this Twitter problem in the autumn before it collapsed. And then in the spring, the American banks started to have problems for slightly different reasons, but the problems were kind of emerging in the same way, through social media and digital bank runs. And that sort of spilled over into a general fear among investors and some clients, especially some of the bigger clients of banks about, where is my money? Is it safe? So I think in some ways it's the American banks sort of speeded up the demise of Credit Suisse, but they sort of lean on each other. Those two events, they definitely go hand in hand, I think.
And is this really a warning against deregulation? Because I remember reading a paper about bank deregulation and how it often leads to scandals a couple of years down the road. And of course, with the new Trump presidency, what we're hearing is they're going to deregulate banks. So do you think this is a warning about what could happen if that happens?
It's difficult, right? So I think in the US, definitely there was the move to deregulate in the US, even over the last few years, has exposed some of those banks there to the things that went wrong with Silicon Valley Bank and Signature and so on. And so if further deregulation under the new Trump administration, I suspect, is only going to likely lead to more problems. In Switzerland, actually, I'm not sure if that was necessarily the case. So, if you look at Credit Suisse, actually it meets all of the sort of capital requirements and all of the sort of rules that are in place to protect banks. That isn't really the problem at Credit Suisse. The problem is these scandals, which mean that it's, deeply tarnished and its clients don't trust it and so on. I think, if there's an argument for regulation, for me, it's around conduct. What happens at Credit Suisse is, despite all these scandals we've talked about, hardly anyone ever really suffers, right? So, despite all of this stuff that we've talked about, the number of people who go to jail, I could count on one hand. It's sort of bizarre. And, in fact, the CEOs and the senior executives walk away with hundreds of millions of dollars collectively in pay.
Well, you say this, don't you? FINMA noted that the bank made a cumulative net loss of more than $2 billion over the 10 years before the collapse, yet it paid out bonuses of around $35 billion in the same period.
Yeah.
Talk about moral hazard.
Right. So I think there's the problem right there, right? It's not about whether the capital requirements are high enough or low enough or those sort of restrictions. The problem seems to be that whatever you do, if you're a senior executive in a bank, you get paid really well. And in fact, you probably get paid better if the bank takes on loads of risk and, your particular bit of the bank is generating some revenue for a while, even if you have to leave because, some scandal emerges and forces you out. In the meantime, you've made a lot of money.
You enjoyed your career in banking, didn't you, Roman?
I loved it. I actually did love it. I actually spent a lot of time in Zurich, and what was interesting was the number of bright people I worked with. And I don't think there's any other industry where you get that combination of skills, money, and fun. I think it was just incredible. And I learned so much about derivatives and how things are priced and traded. I absolutely loved it.
Well, I think if you talk to people who worked at Credit Suisse, they'll say the same. It's actually amazing how many people really loved working at Credit Suisse. And clearly not everybody at Credit Suisse was involved in misconduct. vast majority weren't, but enough were that it caused problems. But yeah, I think people at Credit Suisse would say the same thing. Most of the people I talked to for the book would say it was like the best part of their career, the most exciting, challenging, interesting part of their career. I think the problem, as I say, comes when the pay is so vast and the punishment for wrongdoing is minimal. Then clearly that skews you towards excessive risk taking and away from being kind of on your best behavior.
As we're learning from Duncan, the story of Credit Suisse is full of crises and drama. Join our community to learn how to avoid that kind of drama in your own personal investments. Learn more by going to pensioncraft.com/membership.
Okay, today's dumb question of the week is, how do you stop a bank run?
Well, I think once it's started, it's really difficult, and you're sort of left to chance a little bit. Digital bank run is particularly challenging, I think, because you can't get on Twitter and sort of deny that your bank's in trouble. That only makes it worse. I think the only way to stop a bank run is to run a really, really good bank, try and avoid some scandals, and then people might believe you when you say that everything's safe and sound.
I mean, I guess the point is that no bank is immune to a bank run, right? Just the nature of banking means you don't have enough cash on hand to pay everyone if they run out of the door at the same time.
Correct. I think that's the fundamental weakness in fractional reserve banking, as it's called, is if I put £100 into the bank, they don't keep £100. They give it out to somebody else, and if I go and ask for my £100 back, they don't have it right there and then. It is that's the fundamental weakness, and if we all ask for our £100 back at the same time, then they're finished. And it's like a thing we don't ever want to really acknowledge, because it's really uncomfortable once you accept that that's what's going on.
I guess if you're a hedge fund, the way they do it is via gating. So they literally turn around to their clients and say, sorry, you can pull out this much money, whoever's first, and that's it. You can't take your money out now. Obviously, a bank couldn't do that.
Yeah, exactly. Bank deposit, you expect to be able to get it whenever you want it.
I guess regulators and governments have put some institutional safeguards in place to sort of lower the risk of people feeling they have to run on a bank. So you have things like deposit insurance. So the government will guarantee the first, 85,000 or whatever it might be in different countries. Central banks there to provide liquidity and emergency loans to banks. But even that is not enough, really.
Yeah. I mean, you're right. When things go really wrong, as they were in the US around Silicon Valley and Signature Bank, what actually happens is Janet Yellen and Joe Biden at the time come out and say, don't worry, everything's fine, we've got your back. And that sorts it all out. However, that's also uncomfortable to acknowledge, really, because if you say that actually, who are you really putting your money with? It's the US government. Then what on earth are we paying the banks for? Why are all the bank executives getting paid incredibly well when actually all they're doing is holding money on behalf of the government, managing a system? They're sort of intermediaries, really.
And I guess the solution that lots of governments have come up with is the idea of bail-ins, where the people who are on the hook are the shareholders, then the bondholders, then the depositors, and the government really isn't so much on the hook. At least that's the theory.
Yeah, that's right.
I guess this whole banking thing has built up because like you say, it makes people uncomfortable. So we need to pretend that the money's there so we can lend money to productive businesses while pretending it's not us doing the lending when it is us doing the lending, really.
Correct. It's a big confidence game, isn't it?
Yeah.
Well, that was great, Duncan. I'd really recommend Meltdown for anyone that wants to understand how banking works and what can go wrong when bankers go off the rails. But you're a great storyteller to be able to turn this 160-year-old story into such an entertaining book. Thank you so much for joining us.
Thanks, I really appreciate talking to you.
Thank you for joining us for Many Happy Returns. Keep sending us your questions, no matter how dumb, at mhr@pensioncraft.com.
And do remember to check out PensionCraft.com for all the information about our membership, courses, and investment coaching options.
Many Happy Returns is a PensionCraft production, co-hosted and executive produced by Romin Nakiza and Michael Pugh. This podcast is for informational and entertainment purposes and is not financial advice. We do not provide recommendations or endorse any decision to buy, sell, or hold any security. We cannot be held responsible for any actions listeners may take, and investors are encouraged to seek independent financial advice.